Welcome to Gradient's weekly business roundup. Today's episode will cover the following topics. The Cabinet approved a Rs 3.8 billion allocation to purchase organic fertilizer locally for the next Maha season. According to Plantations Minister Dr. Ramesh Pathirana, certain nutrients that help to enrich organic fertilizer, such as nitrogen and potassium, will also be imported. This follows the Sri Lankan government's decision to ban import of chemical fertilizer, citing adverse health impacts from exposure to chemicals over a prolonged period of time. Such actions were met with mixed emotions, as some encouraged the move on health grounds, whilst others foretell potential drop in cultivation yields that could potentially lead to short-term production shortages. Sri Lanka spends close to Rs 48 billion annually on import of chemical fertilizer, which going forward is expected to be saved and utilized towards building organic fertilizer supply domestically. International news agency Reuters reported that the IMF's $650 billion special drawing rights facility will be distributed to member nations next week. The managing director of the IMF, Kristalina Georgieva, stated that this SDR facility is, quote, the largest SDR allocation in the history of the IMF and a shot in the arm for the global economy at a time of unprecedented crisis. The respective SDR amounts can be considered as foreign currency reserves by countries. Sri Lanka has 578 million SDR quota, which the country has the option to draw from to boost its foreign currency reserves. Sri Lanka's foreign currency reserves as of July 2021 stood at $2.8 billion. Workers' remittances saw a 35% year-on-year decline for the month of July 2021, falling to $453 million, bringing the total remittances in the first 7 months of 2021 to $3.8 billion, which is a year-on-year increase of 2.6%. According to Daily FT, some analysts attribute the loss of momentum in remittances to reduced use of formal banking channels to make transfers in favor of more lucrative grey market channels, which are claimed to offer a better exchange rate, whilst others have opined that COVID-related uncertainty could be a reason for slowdown in remittances. More than 50% of Sri Lanka's remittances come from the Middle East, whilst 30% of the country's migrant employees are housemaids. On a positive note, Sri Lanka's exports recorded 1.3% year-on-year growth, standing at just above $1 billion in July 2021. The central bank indicated plans to place a ceiling on rates of dollar deposits held by exporters in order to narrow the rate gap between rupee and dollar-denominated deposits and rupee loans. The central bank governor stated that the intention of this is to address the discernible difference between rates paid on deposits of export earnings kept in foreign currency accounts and rates that have to be paid on rupee loans. Policy rates were raised last week by 50 basis points, which many saw as action taken to resolve this discrepancy. Emirates announced that it will resume flights from Colombo-Male from 1st September 2021. Further, tourists from India who are fully vaccinated are welcome in Sri Lanka without prior approval from the Foreign Affairs Ministry and the Civil Aviation Authority. On a related note, the government decided to issue tourist visas valid for 6 months to those applying via the electronic system. Visa charges are $70 for tourists from SAARC countries, $85 for those from non-SAARC countries, and $50 for tourists from Singapore, the Maldives, and Seychelles. The NCPI's headline inflation increased to 6.8% year-on-year in July 2021 compared to the 6.1% year-on-year increase in June 2021. Food inflation rose 11% year-on-year in July 2021 versus 9.8% in June, whilst non-food inflation grew 3.2% year-on-year in July 2021. The all share price index at the Colombo Stock Exchange ended the week to 26th August at 8,920.71 index points, an all-time high, breaching the previous peak of 8,812.01 index points recorded on 27th January 2021. Daily turnover was over Rs 10 billion, with solid movements in fundamentally strong companies as well as in several with low free float tickers, supported by speculation that the government may go to the IMF for a structured facility. Moreover, LOLC Group stake in Sanasa Development Bank increased to 15% from SCB's secondary public offering for Rs 1.2 billion. As per the central bank, the indicative US dollar spot exchange rate as at 26 August 2021 was 199.95, up from 199.90 a week earlier. However, market rates offered by commercial banks significantly increased and widened, breaking through 221 at one point. And that's a wrap for today. Hope you have a great day, stay safe and stay healthy.